a couple of minutes here. I just did want to let you know that we're on board. It's Stan.Heller here. And if you could just chat in and let me know if you can hear me okay and where you're tuning in from, that would be great. I always appreciate that before we get started. Let me do a couple of things here. There we go. Okay, so Richard from Washington, great to have you with us. And Paul says sunny in Burlington, Ontario for a change. And Jeff is with us from Esterhazy, believe it or not, in Saskatchewan, and I've been there. Great to have you with us, Jeff. And Eric says, good morning and eager to hear what Dr. Starr has to show us. You are going to be so pleased and impressed. It's fantastic. So delighted you're here. Just grab that cup of coffee right now and close any open tabs and give us your undivided attention because it's going to be fantastic. Dominic, great to have you with us. And Peter from Barrie. Wayne from Houston, our user group leader out that way. Great to have you with us. Jim from Peterborough and Fred from Barrie is with us. Great to have you, Fred. And I guess we'll see you in Toronto soon at the end of the month for our Toronto 2-day. Tom is with us from Ottawa. Tom is with us from Burlington. We've got a few Toms in the group, and we have another Heller in the group. I don't think any relation, but from Oregon. Great to have you with us, William. And looks like sounding is good all the way along. Unaid says, thank you, Stan, for wonderful portfolio, still up 58% in a tumultuous week. Well, that's pretty fantastic, and delighted to hear you're doing well with the things that we're all learning on these user group forums. Really fantastic. And gosh, there's just so many people coming in now. It's going to be another fantastic global experience with everybody here. We have Montreal represented. Elaine, good to have you. Newark and Delaware. Not sure if we have any overseas folks yet. They may be here. I don't see them coming in. Sacramento, audio is good. That's great to hear. So, we've got Scottsdale, Arizona. We've got Hamilton, San Mateo. GTA, Toronto area. I'm just scrolling down now. Bill from Dallas. We've got Calgary, just north of where I am, and Mark from Northern Ontario Cottage Country, and Eric P. from Quebec. So we've got a great turnout, and just delighted to have you all with us. I'm actually going to hit the record button, and we will get started. And yes, we do have Sean from the UK, and looks like others from Australia here. So I can see the names, and it's looking really, really great. So thank you all for joining us. Mohammed, great to hear you from Vancouver. That's awesome. All right, I'm going to start the recording, and let's get going. We've got a lot of ground to cover. Thanks for joining us, everyone. All right, well, hello and an official welcome to our International Online User Group Forum for Saturday, May 11th. Great to have you all with us. My name is Stan Heller, consultant for VectorVest Canada, and I'm sort of your host and moderator, I guess, for today, and it's my pleasure to do so. I want to let you know that we have in the background helping us out William Land from our support team, one of our senior support consultants from VectorVest, joining us from North Carolina. Delighted to have William with us. So do ask your questions as we go through, and William will be able to help you, and I'll be able to help you as well. We'll kind of tag team them a little. Beautiful day here in Lethbridge, Southern Alberta. Really fantastic. I like to say I've got the greenest lawn in the cul-de-sac, and we back onto the park, and I can tell you my lawn is a lot greener than the park. It's been that kind of a beginning to the spring, a little bit of moisture when we needed it, so it's all good. All right, so some formalities here. If you have a question or comment, this is the chat box. Please do type it in right here, and then you'll see the send button, and you can click on that to get it through to William or myself. And and then click on the orange arrow to open this up once it does collapse on you, as it will do. I am recording the webcast. I pushed the button, and I should have the recording link out to you tomorrow. I schedule them out throughout the day, so depending on where you are, when you registered and that sort of thing, you will get that tomorrow, along with a copy of the slide set from today as well. I know from the feedback I get that many of you find that very helpful, especially to get the slides with it as well. And the purpose of our forums: to further your knowledge of the VectorVest system, share current ideas and strategies for making money and protecting wealth. And that's so important. We're going to cover all of that today with Dr. Starr's presentation for making money and buying at the right time, and also from the views in all our countries on protecting wealth. Great opportunities to interact and share ideas with other members of our VectorVest community. Always appreciate your comments and questions. And promote the meetings and activities of our VectorVest user groups. Just you know that in the views every Friday, you can scroll down to the user group listings and find a group near you. Click on the link to find the agenda, date, and time. And nothing beats getting together with fellow investors and learning how they are using the VectorVest program and what stocks and ideas they're trading. And then finally, for those that don't live near a user group, this forum is to provide investors with that opportunity for sharing and fellowship and asking your questions. All right, thanks, Ed. Says, here we go again. Looking forward to a great forum. Yeah, absolutely. All right, and then something new the last 3 forums now. VectorVest has decided to put our forum presentations on their YouTube channel. So there's the link there. And if you want to view the recording immediately after the webinar, just go to that link and it'll be there for you. And also those are kept in a library on YouTube, so you can go back and listen to those previous 3 forums as well. And there was a comment coming in, just someone who really does enjoy having the YouTube availability. So there's our agenda. So we do have quite a bit of material to cover. I want to give a lot of time to our special guest, Dr. Barbara Starr. Many of you have heard her presentations before, and so you know how effective she is, such an accomplished trader herself, but more important for us right now is such an accomplished teacher as well. And then we'll take a few minutes at the end to look at some tips and ideas from Dr. Toledo's 7 Secrets to Making Money with VectorVest. That's really the theme of our Toronto 2-day workshop that I'll talk about a bit later, but we really dive deep into all 7 secrets in that one. Little quick risk disclaimer: everything you will see in here is provided for educational purposes only, should never be considered as investment advice. And so you can read through this at your leisure. There is risk in investing, so you just need to know that our information today is designed to empower you to make your own investment decisions, and these decisions are yours and yours alone to make. And I did notice there, Jacinth has not been receiving the recordings of the last forums. Folks, when you register, if for some reason you make a typo in your email, then sometimes it's going to be difficult to get that auto recording. I'm not saying that's what happened here, or it could be going to your spam folder or a junk email. That sort of thing, I'm aware, does happen from time to time. But in addition to my email that goes out tomorrow, GoToWebinar sends out an automatically generated email on Monday morning. All right, let's quickly look at our color guards here. It is a bit of a sea of red, and a lot of that, of course, has to do with the news out of the United States with the trade talks with China not going so well, and increased tariffs imposed on China goods and services. So it really did have an effect on the markets this week, but it's kind of interesting. Even though no trade agreement was reached, there was some optimism or some optimistic words from President Trump, and that did send the markets higher at the close on Friday. And so I'll talk about that a little bit later. But in Canada, we are up about 11.9% for the year to date. But when you have a color guard with this much red, you know it's a time to be cautious until we kind of hit a bottom and start to come up off of that bottom. Our buy-sell ratio in Canada is below 0.2, and so that's getting near where we're searching for a bottom. The MTI is still at 0.85, so we've got some room to go there. We are very close to a confirmed down call. In fact, we had the signal for a good part of the day on Friday before that late afternoon rally took price above the 65-day moving average. That was the only thing left to give us that confirmed down call. And our rule of thumb in Canada, we don't get very many confirmed up or confirmed down signals. When we get a confirmed down, we want to really pay attention to it. And when we get a confirmed up, we want to be buying early in that signal and then just managing our position. So at this stage, other than swing trading for short-term gains, we should be managing close to a full portfolio with that confirmed up call that came on January 15th. The US side up 14.4% year to date. They're getting a lot of red, and they did get the confirmed down call on May 8th, actually. So I think that was Wednesday. And so really a time to be cautious. VectorVest not advocating buying stocks at this time. Bit of a kind of a rally again at the end of Thursday and the end of Friday. So the sellers or the buyers actually were coming in quite strongly, but Dr. Lito is advising caution. And in Australia, we have 10.6%. You can see the color guard is neutral, not advocating buying any stocks. Still in a confirmed up call. Not as much red as Canada and the US, but caution light is on. And the UK, 8.53. These 4 countries all kind of fell back on their year-to-date from our last meeting in April. And so we have a neutral color guard with 3 yellow lights across the top. You can see the buy-sell ratio still fairly healthy at 0.95, better than the first 3 countries, and the MTI 0.97. So, caution light is on, but a little bit stronger market overall. And then Singapore, the Asian countries hit a little bit harder than North America. 3.05 now for Singapore year to date. Color guard is neutral. We've got 3 red lights. They got the confirmed down call on May 6th, and the buy-sell ratio is at 0.24, RT at 0.99, and the MTI at 0.84. Europe 11.36, and the buy-sell ratio still fairly healthy at now fairly healthy at 0.61. Moved up quite a bit on Friday, but in a confirmed down call as of May 9th. And Hong Kong up 8.4 for the year to date, and lots of red showing up now, the confirmed down on May 6th. So really a time to be cautious. So it's kind of, when you see the world markets in VectorVest, I think you get a sense that caution is the order of the day. Protect the positions that you have. Use good risk management. Dr. Lito wrote in the views, sell those falling RT stocks when they fall below 1. In other words, if you previously had a sell rating on your more recent positions, you might want to tighten those stops. You might still manage your longer term dividend payers, a little bit with a wider stop, but protect against those short term positions right now. So in Canada, you can see the color guard fell over the week. Buy-sell ratio, RT and MTI also moved lower. And if we move lower next week, the VVC is going to fall below its 65-day moving average, and we'll get a confirmed down. So you can see I've got what I showed you last month with the RT kicker combo triangles. And you might recall I said, one triangle isn't such a concern, but if we start to see a cluster, 1, 2, 3, 4, then we start to get concerned that we could get a stronger, lengthier type of pullback. So this month we started to see our clusters coming in early in the week, and sure enough, we did pull back even after we did break above this resistance zone briefly 2 weeks ago. All falling MTI, falling buy-sell ratio, really strong fall on buy-sell ratio. We only have 137 buy-rated stocks in Canada at the moment, so not a strong overall market. I did write in the views about building wealth like Grace Groner. This is views that I now write for the Canadian market, and it really talks about really the advantages of long-term investing as long as you buy the right stocks. Buy and hold the right stocks, then you can start to kind of manage them a little bit better. So it really starts with finding the right stocks. Okay, so that was Grace Groner, and she bought three shares of Abbott Labs in 1935. And by the time she cashed them in, she had over $7 million just from those 3 shares, reinvesting the dividends. Quite an amazing story. So I did want to share that, and I was really pleased when VectorVest asked me if I would do the Strategy of the Week, a special one for Canada. And I did that, and it's called How to Get Rich Slowly, like Grace Groner, because we can do this in whatever country you're in. My 2 favorite indicators for these long-term holds are the dividend safety and the dividend growth indicators. So I talk about that. And here's the example that I showed using a 30% trailing stop with a dividend safety of 65 was my best return. Of these 10 holdings, 6 of them were purchased the first year of 2012, and we're still holding them. 4 of them have triple-digit gains. So pretty amazing strategy, and Grace Groner really shows all of us the way for our long-term positions. And we're going to talk about that and much more in the Toronto 2-day. So if you've been thinking about joining, don't delay, because the early bird savings expire on May 17th. And I would say the live stream, we're going to talk about US and Canadian stocks, mostly Canadian stocks, but all the strategies and principles are the same no matter where you live. And so if you're thinking about a course that can help you become a better investor following Dr. DeLito's 7 secrets to making money, then the live stream is a great way to go, and $100 saving as well. And William can probably type these links into the chat box for you, the vectorvest.ca/Toronto, to get the details and the registration information. And then the Toronto 2019 gets you the live stream. On the US side, I really want to highlight here in the views the caution, because even myself, I'm looking at the charts and I do see these long shadows underneath price, and we could get a continuation of a little bit of a bounce here because of the optimism that President Trump expressed. So we could see a little bit of a bounce next week, or things could just turn around and go south. But when we see these RT kicker combo red triangles, and you see the divergence here with MTI continuing to fall and the buy-sell ratio, Dr. DeLito says, let's just stick to our game plan, get rid of your low RT, sell-rated stocks that are long, unless you know how to protect yourself with options, heed the color guard, and buy contra ETFs or sell stocks short only when there's a red light in the price column. So he's not saying dump all your long stocks and go short, but just keep an eye on things and maybe start to hedge a little bit with the contra ETFs if we start to see more red lights. Okay. All right, so let's move on. Just again, these long shadows underneath the major indices as well. I just did want to show that because it does suggest that we might have more short covering, short squeezes, people that are short rushing to get out of their positions and driving prices higher. We may see that, but the caution light is on strongly. We also see the VIX coming back down to this support level. If it continues to do that, then certainly the SPY could rise. Just be cautious, everyone. Are there any questions? Alessandra was wondering how she could watch that Grace Schroner presentation in the US. And I don't know. I don't know if we can arrange that or not. If I can, Alessandra, I certainly will do that. What I mean is these long wicks or shadows. Somebody asked a question there. Richard, I think, asked that question. So you can see that when we have, for example, in the SPY, if I can draw your attention to that, you can see that we opened way down here at this support line, and then price actually fell very sharply. I think the SPY was down about, or certainly the SPX was down about 40 points at one point. And then throughout the day, we recovered, and we actually closed higher than the previous day and even higher than Wednesday. So that's this long wick or shadow telling us that. Okay, very useful. All right. I think that was, Kamel says the VIX is a buy on the dips. Yeah, it could come all the way down to support. We don't know. We'll see. All right, I really wanted to get to this presentation. This is so exciting. We're so pleased to have with us Dr. Barbara Starr. She's going to talk about identifying swing trading targets, an easy method for determining high probability price targets based on a simple, often seen chart pattern found in both up and down markets. And you'll learn how to recognize that pattern as Dr. Starr goes through the presentation. And you all know about Dr. Starr. She's an accomplished trader, writer, and teacher, and we're delighted to have her. So I'm going to turn it right over to Barbara. I just have to make sure her mic is activated. And Barbara, can you hear me, and are you there?
I am here, and I can hear you.
Okay, that's awesome. I'm going to make you the presenter right now. So if your screen is ready, we'll soon have your slides and VectorVest program up. So yes, we do want to do that. And now I am already seeing your slides. So Barbara, thank you again for joining us on behalf of everyone. You can see some of the chats coming in. Welcome, Dr. Starr, and just appreciate having you here, and so do I. So thank you, and best of luck with your presentation.
Well, thank you very much, Stan. I appreciate it, and I am so glad to be with you today. I want to present something that I think you're going to find a lot of fun to do as you experiment with it, and that's to identify swing trading price targets. I enjoy swing trading, and I think many of you also do. And one of the things that we have to figure out is, where is that swing going? And this may help you to do that. First, we do the disclaimer. Please remember, as you read this disclaimer, that neither VectorVest nor I are licensed to offer specific investment advice. You should be aware of the risks involved in stock trading and investing, and know that everything you see and hear today is provided for educational purposes only. Many of you, as Stan said, have already seen some of my presentations. You already know that I'm a part-time trader and contributing writer to the magazine Technical Analysis of Stocks and Commodities. I've been writing articles, original articles, as well as product reviews there since 1991. I wrote the article that turned out to be the basis for what VectorVest called its star search. I've led a metastock user group for many years, and was vice president of the Market Analysts of Southern California, which was a group started by John Bollinger and several of his colleagues. Currently, I provide individual instruction and consultation for those who are interested in technical analysis. And if you have any questions at all, please feel free to contact me at the email address you see here on this slide. Today, what we're going to do is learn how to identify a price swing. That's sometimes a very difficult thing to know how to do. And once we've done that, we're going to identify a specific price pattern. We're going to create a tool that will project price targets for us, and then we'll calculate how those price targets take place. We know that price swings form price trends. I'm not sure how well you can see my cursor here, the arrow on there. Can you see that at all moving? Stan, I don't know if you can see that. At any rate,
yeah,
if
I
you
can
look
see
from,
that. Barbara just had to activate my mic. Yes, all good.
All right, fine, because what we see is that when you're working, look at the left-hand side of the chart, price swings go up, they pull back, they go up, they pull back, up, pull back, up, pull back, until finally they can no longer continue to do an up move, and then they start moving down, and they rally, pull down, rally. Notice that these price swings can be of different sizes, different lengths, but they are the building blocks from which price trends are formed. And that's very important. Well, the question is, though, how do you identify the tops, where these price swings start? Where's the tops? Where are the bottoms? W.D. Gann decided that he came up with an idea that your price swing, or the way that price changes direction, can be best measured by looking at the price chart itself, and so knowing that when there's a swing high, price has made a high that was preceded by 2 bars with lower highs and followed by 2 bars with lower highs. And the reason I have the hand up here is because you can always remind yourself of what that looks like simply by raising your hand and pointing it palm towards yourself, so that you can see that normally you'd have the middle finger being the highest point on your hand, and 2 fingers preceding and following that would be the lower highs on either side. So basically, it takes 5 bars to create this type of a swing. And that is not to necessarily tell you when a trend has changed, but at least will tell you when direction has probably changed. On a swing low, price makes a low that was preceded by 2 higher lows and followed by 2 bars also with higher lows. And again, all you have to do is point your hand towards the floor, and you will find that the middle finger is the lowest one there, with highs on either side of the middle finger. So that's just a way to for you to remember what that is about, and what that swing change in direction comes about. It doesn't always happen, however, in as precise as that manner as we would like it to see. So, but it does. I'm showing you this chart of price swings in an uptrend, and you will see that it was preceded on the left-hand side. It was preceded by 2 bars down to the low, followed by 2 bars up to the high, just the way that it was supposed to happen. And you will find that these swings take place as price is moving gradually up towards new highs and into a new trend. Sometimes it's hard to see that all by itself. So sometimes it's very helpful to have some 3-period simple moving average that is going to be a kind of a surrogate for our price movement. And we find that they are, this is exactly the same chart that we just saw. And you will see that the price movement's going up and down, where the moving average is making its highs and its lows as it's pulling back. Will give you an idea of where the lows and the highs come in on these price swings. Take a look also to the right. I am using the VectorVest layout. In the graph control panel, you'll be able to see that there are built-in, hold on a minute, let me just clear my throat. Thank you. You will see that in the graph control panel, the second one down from the top is a VectorVest layout. It has the RT on it. And that can help you to identify price momentum as it's above 1 or below 1 to help you to verify price direction. You see price swings in a downtrend. Again, we have the 3-period moving average, and we have a high starting at the left with the lows and highs identified as the 3-period moving average follows price and changes direction. Most of the time that will help you if you need that help to identify where a price swing starts and where it ends. And again, the RT was below 1 in this case, and it showed that it was price was going down. This is Facebook, as you can see, and it was having a very, very hard time. The pattern we want to look at is known as a failed retest pattern. Now, recently I did a review on a product that was using this particular pattern. The pattern itself is not proprietary, so I'm not taking anything away from what is a very excellent product that this person developed. But I'm going to be doing something that's a variation on it. This was a pattern itself has been around since price charts have been around. But it was described and made more popular by Victor Sperandio in his book, Trader Vic Methods of a Wall Street Master. And if you haven't read it, it's really kind of a classic. I'm going to be doing a variation on it. This pattern is commonly known as a 1, 2, 3 reversal pattern. And it's usually a reversal for trends. Well, that's perfectly fine, but a lot of times, as we've seen with the swings in a trend, those swings take place to form the blocks that make up the trend. So we have to be able to look inside and see what happens when there's a continuation of price direction and not just necessarily a price reversal. That's the reason that I'm doing this today, to show you that when a failed retest of a high would be when price makes a high, then a pullback to a low, then a retest of that high, but it does not make a higher high than the original high. And in a failed retest of a low, price makes a low, then rallies to a high, then does a retest of the low that does not make a lower low. Here is that chart that shows you a failed retest of a high. We have high, and that high is usually known as 0.1. Price falls and stops and makes a low at 0.2, rallies to a high at 0.3. This is the retest high, does not take out the original high at 0.1, and so price is expected from that point to continue to the downside, especially after it takes out this 0.2. Here we have a failed retest of the low, where price has come down, made a low that we will call 0.1, rallied, made a high at 0.2, did a retest of the original low, and did not make a lower low, and then continue to the upside. I like to use RT, by the way, to see where these pullbacks come in. A lot of times that will also help you to identify where there was a pullback and whether that pullback took out the prior low or the prior highs for that matter. The next thing we want to look at is how do you do price projections and why are we going to do them? We're going to do them, first of all, to identify 3 potential swing trade price targets. And the reason we're going to do them is to find out, is there enough room from an entry to a target that makes it worthwhile to take the trade? And I want to make sure that you understand this is what I'm showing you today is just a kind of a strategy that will help you find potential targets. It is not meant to be a system. It is not meant to be an entry or an exit level. The projection tool we're going to use is the Fibonacci retracement. We're only going to make a few modifications to it, and when we go into live charts, I will go through this with you. This particular slide is only there to serve as a reference, so you can refer back to it to make the changes in your own program if you'd like to try and see how this works for yourself. So I won't spend time on this right now. I'd rather you see what happens or how to apply the fib lines to the charts. In an uptrend, the Fibonacci projection is from point 1 low to a point 2 high, but only after we see a 0.3 failed retest of the low that has taken place. And in a downtrend, the Fibonacci projection is from a 0.1 high to a 0.2 low after a 0.3 retest has failed to take out that particular high. And this is what it looks like on a chart. What you are seeing, first of all, are 2 gray lines. Those 2 gray lines signify 0.1 and 0.2 on the price chart, and just to signify that that's the swing that we're looking at. We see the retest low coming down at 0.3, and that retest low does not take out 0.1. Once it has emerged from this swing high or swing from 0.2 high, we're going to be looking at projections that are up at the 618, the 100, and the 1618 areas. Notice that we can use the pullbacks and the move on RT as it's above 1. And I wanted to call your attention also to how we identify where that low came in. Notice that it had been preceded on the left-hand side of the chart with a down arrow. We don't know at the time when prices move down when they're going to stop. We see it stop, we see it rally. We think that's a swing. Maybe that was a swing low. Only to find out that price didn't hold at the swing low. It continued lower. It stopped there. Made another rally attempt. Only to have that rally attempt fail. So the reason that this is 0.1 is because there was no failed retest. These retests of the lows all succeeded in making newer lows. This is the first one that did not make a lower low. We'll look at the same thing from when we have a high in place and we draw from 0.1 high to the swing low of 0.2. We wait until we see that there is a rally to 0.3. And once price starts to continue in the direction that we are hoping it will, we are looking for a first target at 618, a second target at 1.0, and a third target at 1.618. You can see again that RT was well below its 1 line when this was happening. Now I'm going to show you something that is a continuation move. Here we have a chart that's clearly made a low, has a swing high, a retest of that low. So we have a low at 0.1. This would be a high at 0.2, identified by where the gray solid lines are. And we've made a failed retest of the low and a continuation up into we meet the targets of 618, 100, and in this case, it went up to 1618. But then it continued. And so what do you do when it continues? This is the same chart. And on this chart, you'll see, remember, this was 0.1 down here. We had the swing high, and this had been the retest low. And it failed to make a new low. So now what we are looking for is where is the next point at which price has pulled back. And we can see that it did that up here, and this was in January of this year. Price pulled back, and that gave us an opportunity to say that what had been price 3.3, sorry, now becomes 0.1. So that old retest low at 3 became 0.1. Our new high takes place prior to that pullback. The pullback identifies a retest of 0.3 that did not take out the old 0.1. Notice how much wider this swing is. Price continued to move above that area, made it to 618, made it to 1.0. And let me point out that the 1.0 area should be the same distance, is the same distance between the two gray lines that we have, the two solid gray lines. So you can identify whether or not it's worth getting into this trade in the hopes that, and remember it's always hope, but it's and the potential for a continuation move. You can determine up here at 618 whether or not you'd like to take some profit, or you'd like to add positions, or you can let it ride and go up hopefully to higher levels. So let me just recap. We're first going to find a 1, 2, 3 swing pattern. We're going to project the Fibonacci ratios. And for a continuation move in an uptrend, we're going to wait for the next pullback, then create a new 1-2 swing from the low of the last retest low to the new high that just took place before the current pullback. Before we go into the live charts, anybody have any questions? Stan, we have questions?
Hi, Barbara. Sorry, I was typing. Yes, we do have questions. And we have comments just about the clever presentation and the clever methods that you're using, Barbara. So we had a lot of great comments on that. A couple of questions. Eric L. Was wondering, when you're looking at the tops and bottoms, are you looking at the closing prices or the shadows, or is it just the closes?
That's a very, very good question. I'm looking for the highs and the lows of the bar.
Okay, so the highs and the lows. Okay. And then quite a few people have asked about the time frame. You're showing the end of day. Does it work on intraday? Could it work on weekly charts as well?
It will work on all chart time frames. There will be fewer of them on a weekly on a weekly chart. There will be more of them on an intraday chart.
Okay, and Ken and a couple of others were asking about where do we find those fib lines. So when we get into the program, we'll make sure we
And
show that.
absolutely, that'll be the first thing we'll do.
And I just wanted to comment, Barbara, several people chatted in right away, commenting that they love the joyful picture of the girl on the swing, which
Well,
I
it's
thought was
supposed to
pretty,
be. It's
I
supposed
thought,
to be the year of the woman, and so I figured we'll use a woman in this one. And I'll tell you, I love that picture too. I thought I'm glad you like it because it's such a happy thought, and it is springtime, so that will be fantastic. Thank you.
And then just a comment, such a clear explanation of how to identify the swing low was really helpful. The failed retest of the low being really helpful. And then it prompted the question though, so when would you enter the trade and when would you exit the trade? And maybe we could show that in the program. I'm not sure.
What I'll do is let's go to the program. That's a good question. And let me just escape out of this and get into VectorVest program. Here's the Canada program. And the ones we're going to do today are, actually, I'm going to show you just the two charts. I don't know what kind of time we have. But what I've decided
We've got a good 15 minutes.
I'm sorry?
We've got a good 15 to 20 minutes to show. So
oh, good. That's great.
Yeah.
I've decided to use May 3rd only because it gives us a little time to see what happened the week that just took place. So rather than didn't do it at the end of this week, I did it at the end of last week. Okay, Friday's last week. I looked in the special watch list for stocks that were both Canadian and U.S. interlisted stocks, so that we would have that. I'm going to just put up these two charts right now. And I'd like to go back 6 months. And the reason that I'm doing that is because we know that there was a major move that took place in December, towards the end of December and up into the current time frame. So it gives us a good idea to see where lows did come in. And this is just for purposes of teaching. This is not for any idea of you're going to see this all the time. You won't necessarily see this all the time. The thing that I want to be able to show you is the Fibonacci tool. And in order to do that, we're going to see, do you see where it's blue up here, where the date line is? Go to the next panel next to it, that next area. I don't know what it says on yours, but just click that down arrow. Go to the Fibonacci retracement. And in order to make any changes on the Fibonacci in this program, you first have to have a line drawn someplace. So I'm going to go back and we're going to see that there was a low, I believe, that was made here around somewhere after the 19th of December. Hope you can all see that. If you can't see that, I'm going to just make sure that you know where that is. You can see that took place. And now I'm going to use the Fibonacci retracement, and I'm going to go from that low to this swing high, or to this first high that took place. And I want you to see again that we had two bars that preceded that low, and we have two bars that follow that low. So that's following the WD-GAN method for identifying price turns and changes in price direction. We then had a pullback, and that pullback is price 3 or 0.3. And as you can see, once you have the way that we need to now do this is to right click, point your arrow at the line that was between 0.1 and 2, click right and select style, and that will bring up the style menu that you can change. We're only going to be, yours will probably say 0, 23.6, 38.2, 50, 61.8, 100, 161.8. The only thing we're going to change first is the one that says 50, and we're going to change the 50 to 100. So that's going to give us our two lines that I use as solid lines. I've made them dark gray so that you can identify where that swing is, what the length of that swing is. Then we're only going to put a minus sign. We're not going to change anything here except we're just going to add a minus sign in front of 661.8, minus sign in front of 100, and a minus sign in front of 161.8. I had 200 down there, but it is a kind of, you can put whatever you want there, but it's, I think you're pushing your luck once you start getting past some of these areas. And make sure that as you do it, you're going to check the boxes that you want to be seen. There are only 5 boxes near that need to be checked. Make sure you go into the color menu, decide what colors that you want to choose for these. Decide how wide you want your colors to be and what that line width should be. And look at what the line style is, whether it's solid, dotted, or dashed. Once you've made your decision about all of these, then all you have to do is click on Advanced, which will bring up a new menu here that says Set at Default, which is what we want to click. And then we say, OK. Any questions about how we have identified our price swing and our Fibonacci projections?
No questions. I think it was a very clear explanation, and I know I've tried it already, and I really like it, and I think it's easy to do. Hassan did ask, with the fib lines set in to the 100% linear regression lines is how he uses the fib lines, and it works well for him. Is that something that could be incorporated, is the question.
When he says linear, what does that mean?
Hassan, I believe in the, there is a linear, let me have a look here. I've got to check it out myself. It may be a bit, Hassan, we may have to get back to you on that one. It may be a bit more complex and take us away from the presentation. Let me just have a really quick look. Okay.
While you're doing that, let me.
It's not there. So we'll have to answer that one separately, Hassan. Okay. It really isn't going to affect this presentation and the effectiveness of what we're seeing here.
If by linear he means just a line style, so that you're looking at the closes.
I think that's what he means.
If that is what it means, then you know, it's probably not going to make that much of a difference, except the line style usually is from close to close, and that might make a difference. So that's the reason I use the lows and the highs of the price, whether using the bars or the candles. I'm not looking at anything else except that.
Okay.
So I don't know if that answers the question.
I think it does.
I did want you to notice that there is a question, I haven't forgotten it. You know, what do you use for entries and exits? Everybody wants to know that. The original was that once it breaks 0.2, you have a possibility of potential of a move up, okay? Because we've broken the 0.2, in this case, the 0.2 high. I have a different way of looking at this. I see that price has come down. And if I want to, let me just get a freehand thing here and see if I can make this happen here. I can say, okay, I'm going to follow this down and see how far it goes. And I might get in here just to be, if I were more aggressive, rather than to wait until there's a breakout. Wherever you get in, the whole purpose of what I'm trying to explain to you and teach you today is to say, where might we be looking for or hoping for price to move to, what levels? And we can see that this was the 618 level. And so what you have to determine on this is there enough room on given the price of this particular stock and where you want to enter, Is there enough room to make it worth your while to enter this trade? Well, this was a pretty high priced stock, actually. It was almost $200 at this point, and so that the first move up, I can't quite tell what that is going to be. Let me see here for a second. That would be somewhere around a high price, or let me see, let's take a closing price of 209. So let's say 209, 210. So that would be a move that's possibly a 10-point move. Is that a move that you feel you want to make? That might be real helpful to know, and that might help you make that decision. We don't know what's going to get here. We don't know that it'll get anywhere further than here. But if you're lucky, just delete this. If you're lucky, it will get up there to the 161.8 area, and it will continue. And then you're left with the question of, oh my gosh, now what do I do? Do I want to get out of here? Do I really want to see if it'll stay in? Do I want to take off a part of my position? Where might the next projections, where might those next targets be? So the way to do that is we're going to look first to see where did price go where it made its first pullback. Well, the first place that you have to understand, you're seeing this going to be seeing this in real time, or maybe a little beyond real time as price has taken off. And you want to be able to move this so that it follows price. You will make your own decision about whether this is a sideways, which I see as sideways and not a pullback, or if this is sideways or a pullback, or if this is sideways and a pullback here. We have to make that decision for yourself. But what's very, very nice about this is that you can decide to move the price, the Fibonacci tool up. So we bring the bottom up to our new price. That was 0.3. Remember where that was. And now we will look at, where's that first one that we thought might be? Sideways. It went down a little bit. It was mostly sideways. That's not bad. You were still able to make these other price movements up. That followed it very nicely, and I want you to see that it also provided some support and resistance areas for price. And then you're saying, wait a minute, maybe that wasn't the right one. Maybe this was the better one because we had a pullback that retested these lows and didn't take them out. Didn't take out this one, didn't take out that one. Then what? So we still have opportunities, and that's what's nice about this program is it allows you to be flexible in the way that you are identifying price targets. And remember, these are price targets that may or may not reach that target, but it gives you something to be looking towards to see how well price is doing. So you might then say, okay, that was the new low. I'm going to show you what happens when we're going to say that's the new low. Where was the new high? Well, we had pullbacks here, right? So I'm going to take this, and what's nice about this tool, we're going to make this a new high. And what you see is, yes, you can still find that there's room in this. Oops. You can still find that there's room in this to maybe make it worth your while to continue to stay in this particular stock, okay? So that is one way to be able to use that. I'll tell you what I use and like to use for if I decide to do a breakout, like this would allow it to be used, or if I decide I want to be a little more aggressive and get in at a certain other point like this and see the breakout from there and hope that it doesn't get stalled someplace. I like to be able to use the distance between this new 0.3 and this old 0.1 to say that's where I would like to, I don't want to see price go back because I don't want to give up what I already might have. So if that, I hope, kind of answers your question. I don't want you to just use this as a robot kind of tool where you're going to just buy every breakout here. Very frequently it works, but you know, a lot of times it doesn't. So you have to make your own decision as to how aggressive or how conservative you want to be. Any questions on that one?
No, Barbara, everything is, I think you've answered just about every question that has come in. A comment from Rick, very appropriate. He says, a Mother's Day swing picture, and happy Mother's Day to all the moms out there. So that was very nice. That was Rick from Kamloops.
We would hope you all do that well on your swing trading. Absolutely. Whether it's Mother's Day or any other day. I'm telling you. Yeah. Here we have a lower price stock. This one is only this one is $5, $6, $7, $8, $9. And what we looked for was that pullback. And in this case, we have a low that was made here. And a low that came down and almost took that out. This didn't quite do that. So now the question is, where do we start when we see a picture like this? You can start, one of the nice things about this, you can start any place you want to. It is really wonderful. I'm going to just go into the Fibonacci tool again. And I don't know whether this is the one that's going to work or it's not going to work. So, because we never know that at the beginning. So here we're going to take this high. Go up to that swing high. It's only a couple of bars. Let me see if I can get, and I'm going to close the Fibonacci because if you click on it on the screen at any point again, you will have another Fibonacci line come in, and you don't want a bunch of little Fibonacci's running around your screen. So I will click this off just so it won't keep producing new Fibonacci's. And I am looking for, here's a 0.1. If this is a 0.1, 0.2 did not take it out. So, I mean, 0.2 made a high here. The retest low did not make a lower low. This was actually just two ticks, two little things above where this low was. And I thought, uh-oh, what do you do? And I'll tell you what I do when I see that. This would have been perfectly fine if you had followed it as it was. It took it well above the 1618 area. But what I like to do on double bottoms is I like to use the second bottom. So that's just my preference. You don't have to do it that way. This way worked perfectly fine. But it meant that if you're going to do a continuation, we don't know if price is going to continue, but it certainly did. And once it took out these old highs, we know that it did it's doing a continuation move. So where could it go? Then what I would do is I would move this right over, and you can move the Fibonacci line, by the way, as long as the Fibonacci is not activated. Otherwise, you'll get, as I say, a lot of other Fibonacci's on there. Just point to the line that you drew and move it over. And you can do that. Here's the low. And now where did the pullback come in? Here was our first pullback here. So I'm going to pull up this high to that first pullback. This pullback retest did not take out this low. So now I am seeing that this was a really nice fit as it pulled back and forth and up and down, and did indeed get up to 1618 area. And you might say, well, you know what? I want to do something that's even a little more different because we had a pullback over here too. And here was our last low, because we're going to take our last retest low as 3. And now we're going to make 3 point number 1. So, and here was the high before the new 0.3. So I'm just going to move this up to the new high. And I'm going to move the low up to our 0.3, which is now our new 0.1. So we have a 1, 2, and a 3 again. This takes us right back up to that same place. Now, this is important because this was that same area where it was finding a problem before. and it made higher highs. But look at all of the problem it's having getting through this. Took over a month for it to work itself out. So you might say, okay, I'm going to now move this from the old 0.3 to the new, because we definitely had a pullback up here. So I'm going to take this and move it here. And as you can see, it was having a heck of a time as it went up from that 618 area to even get to a 1.0 area. And you can just barely see it. I'll pull this down just a little bit so you can see that this just nicked that 1.0 area, 100 area. So you can use this in a variety of ways. It's very flexible. You don't have to wait for a classic 1, 2, 3 pattern that very frequently people look for. You can use this also for continuation. Did anybody any questions on this, first of all?
Barbara, I think everybody is really solid with that. Glenn from our Lethbridge user group actually had a question if we could see another example of the downtrend. And then Michael from our Ottawa user group had just a comment and I think a little bit of a question about the RT along the price progression. And I think we're pretty big fans of RT, obviously, everywhere, and we can see how valuable it is for your setup as well.
Well, it can be.
Any comments on that?
Yeah, also take a look at what RT was doing. RT was showing that during a sideways, remember RT is momentum. So anytime you have a sideways pattern, and this could easily have looked like it might have been the beginning of a head and shoulders pattern. We really don't know. There will always be a time when you have this kind of volatility in any kind of a trend for a while, and sometimes a very big move down to correct some of the excesses of price. We don't know if that's maybe happening right now. Could be that this will be the formation of a head and shoulders that's starting now. I don't really know. But one of the things that we can do is show that RT was also having a hard time making higher highs at that point because price was actually doing so much sideways kind of a look. And right now it's showing that we have a divergence on this, a bearish divergence. I don't know if that will continue or not, but that's something you should take into consideration. Does that help with that question? I hope it does.
Yep, that's fantastic. I had my mic off. Sorry, I was chatting into someone there. But
okay, I wanted to see something in a downtrend, and
yeah, I think that would be
that. And if
the last
we have
example for us.
Do we have the time to do this?
Yes, if we can find a downtrend, that would be awesome.
Yeah, I was looking for one myself before because I thought I know that most people like the uptrends, but see if I have CF is one I found before, I remember. So let's go see what that one is. Okay, yes, it was a nice, you can see this had moved up to a top, so we have a high. And the question, now we're going to go to our Fibonacci tool. We're going to take our high. Now you have a decision to make. Does it stop there because price moved up 1 bar? This is where I think people have the most difficulty, and where I sometimes have the most difficulty is, what do we call a retest? This could have been a retest, for Pete's sake. We don't know what that was, but I'm looking for where price stopped actually and started to move back up. It only moved up for 1 bar, and then it continued moving back down. But even if you only use that as your 1, 2, and 3, price was accommodating in this case and continued down to your 618, came back up and retested the 0 line again here, solid line, before it continued on down. It didn't reach that 1618 area. But during the time that it was coming down, we see that there was another swing here, right? There's another low here. Where's another push up? These were approximately the same. So I'm going to say that I can take this line, move it just straight down to new high. Let's see where this low comes in. You want to be real precise, you can do it right there. Whoops, right there. And you can see that came down to it ultimately came down to a 1.0. Remember what 1.0 is? It's the distance between the two solid lines. That's the range you're going to be, that's the range of the swing. That's the length of that particular swing that we're looking at. And we want to see, can it get down at least that same distance? And in this case, we came down that same distance. And it may even go down lower, I don't know. Does that make that any clearer?
It really is. And while you were doing that, I was looking at my hand. And where you have that fib line now is where my hand says it should be.
I'm so glad. I'm so glad that you're seeing the same thing on your hand as I'm seeing on the chart. That is excellent.
Well, I think we're close to the end. You've answered a tremendous number of questions that people have and shown us a really tremendous way to use fib and develop these wonderful trading system for these short-term trades, to know which trades to take. While we were chatting, it looks like Ken was actually in the program and used it on the SPY.
Oh, is that?
He found it very effective with the indice on the U.S. side. So I think it was pretty fantastic. And Alessandra says, our Dallas user group loves you, Barbara.
Well, good for you, Dallas. Thank you so much. I appreciate that. I love Dallas.
Yeah, so that's pretty awesome. And Michael from Ottawa says, yay, something to put in Jamin's risk spreadsheet. So that's a spreadsheet that my son developed for risk management. But anyway, wonderful presentation, Barbara. Absolutely loved it. Hassan said he's been using fib for years, but never like this, and he really likes it. And I think that's the comments that I see coming in. So very enlightening, and thank you so much, Barbara, for giving us your time.
My pleasure. Thank you so much for joining me this morning.
Awesome.
I'll give that back to you. I'll give the mic back to you.
Okay. Okay, and I think that should work and show my screen. And thanks everyone for staying with us. One more presentation to go here. Yeah, looks like we're all good on that. So I just wanted to take a little bit of time and just show some tips and ideas from Dr. Toledo's 7 secrets to making money with VectorVest. These are universal. They work in all markets and all time frames. And I think they're just so important. And by the way, the accolades are still coming in, Barbara. So pretty fantastic. Hard act to follow, but I'll do my best here. And I think it's important to cover all ranges. So tips and ideas from Dr. Toledo's 7 secrets for making money. And I am the VectorVest consultant. I think Nick came in a little bit later and was wondering who this Stan.heller actually is. So that's me. I'm the consultant for VectorVest Canada. All right, so I'm going to go through the 7 secrets with just a couple of examples, and really these are the ones that we dive into in great detail in the Toronto 2-day seminar that's coming up May 1st and June 1st. But I just wanted to kind of give you some idea of what kinds of things we cover through this. And the first secret is just about keeping it simple. Just like Grace Groner, buying good quality stocks, and we can find these in VectorVest so easily. We just have to believe in them, and we have to use good risk management depending on our investment goals. Are we longer term with these for dividend compounding? Are we shorter term for swing trading in the way that Dr. Starr just showed us? But it all starts with the fundamentals of the company. If we're planning to go long, even if it's a swing trade, we want to make sure we're buying a good quality stock. And so we want to buy safe, undervalued stocks primarily, or at least have value rising and rising in price. rising earnings in a rising market. Those are the keys, and try to stay in the top sectors and the top industry groups. Okay. And so here's an example from Canada, CAE. This is a stock that I own, and I love it. Hasn't always been this great, but this is going back through 2013, and you can see this is the green and red are the Midas Touch stop moving averages, and it just has kept going all the way through. And I love this 40 moving average of RT, another Midas Touch setup, and it was strong all the way through, earnings strong, and the key is growing its dividend every year. And then if we look at the US side, this is from the DRIP watch list, top stock in the DRIPs. And so you know that it's been increasing its dividend for at least 25 years. And this is the price action that we're looking for. And you can use Dr. Starr's swing trading setup with this quite easily and get in at a really good level and know what your potential is for the gains. But again, great dividend increases. The second secret is to learn about graphs. And we spent quite a bit of time in the Toronto 2-day showing you the graphs and helping you identify what kind of an investor you are based on the types of graphs that you own, the stocks that you own or have bought in the past. And so if you're prudent, you're going to have a little bit of growth potential here, but nothing outrageous in terms of volatility. And on the conservative side, you're not aiming for so much growth, so your RV is typically going to be lower, but your relative safety is going to be very strong, and you're going to have fairly smooth, steady chart patterns that just kind of go sideways or increase over time. And then, of course, if you're aggressive, you've got to know where these bottoms are. So what Dr. Starr showed us today is going to be very helpful to you. But typically, you've got a low relative safety. You don't want this slow and steady from the conservative. You want the volatility for those quick price gains and then get out. And Dr. Starr's technique can really help us with that. And then if you're speculative, just everything's all over the map. You're taking the tips by rumor and just jumping in. And so if we look at a couple of examples from Australia, here's the VectorVest simple graph that we teach. And very, very simple with price moving bottom left to top right. RT on the graph, very strong. Earnings per share rising to the right edge and some good volume as well. So this is the VectorVest simple layout. I just changed the stop price to a 40-day moving average, and you can do that as well. But very good stocks here. This one, we had a big earnings jump, turning back to neutral here. So, you know, this one, you got a buy rating right here. This one, you got a buy rating back here. And I think you know I love these buy ratings. And Alan says, good morning from Australia. And that is a commitment because I know it's about 1 or 2 in the morning, I think, where you are in Australia, Alan. So thank you for that. At 2 o'clock for Alan. Really appreciate your dedication to be with us. I'm actually doing a session on some of our technical studies that I think will be very, very helpful to people in our Toronto 2-day. And one of the things I love is with stochastics to look for these divergences where we have a bullish divergence where price is falling, but we have stochastics actually hitting a higher low. And this is the way George Lane used his stochastics, the way he set it up. Not so much an overbought and oversold, although that's certainly a part of it, and many investors use it only for that. But he actually looked for these divergences, and so we'll teach more about that in Toronto as well. And you can see from there it took off. And the other thing that you might not know about stochastics, the way George Lane, the creator of stochastics, described it, is that when stochastics is above the 50 line, it's considered, the momentum is still considered very bullish. And you can see that on this chart of Thomson Reuters, where stochastic stayed above this center 50 line, came down and touched it in here, but it was never at risk of falling down to these oversold levels. The third secret is to heed the color guard. just such an amazing tool to know when to buy, when it's okay to buy and when you shouldn't be buying. And we can see the colors. When there's lots of red, we're going to see that the color guard is either bearish or somewhat bearish and don't buy. When we start to see some green, now we're mildly bullish, and VectorVest is advocating caution, but it's okay to buy. And then here is a really strong signal for bullish. So paying attention, heeding the color guard is that third secret. The fourth secret is to exploit the homepage. And a lot of our instructors in VectorVest teach that everything you need to know is right there on the homepage. You should always have your market timing gauge in the middle and your color guard right below it. Everything else you can move around and set it up the way you like, but you've got quick lists available to you. Put in the stocks or the indices that you like to track. You've got your top VST stocks if you want them, and your Midas Touch stocks. Everything is there for you. You can have the current market news here, and then an intraday chart of an indice that you might like to follow, such as the SPX, and your advanced declines if you like that as well. And then your top RT sectors or industry groups, or both of them, if that's what you like to follow. So take advantage of that layout available to you. And then the fifth secret is learning to trade options. If that's something that you're interested in, I think it's important, and that's why Dr. Lito calls it the fifth secret. Even if you just learn the options trades that help you protect your position or your portfolio, and that would be the long, buying a put long, or setting up a call or trade where you use the income from a covered call to help pay for that long put. This can be very helpful to you, and this is the trade that Jim Penna, our manager of retirement services, will explain and demonstrate in our Toronto 2-day. This is a key trade. The sixth secret is to stay informed. Instructors tell me that not enough of our members read the views on a nightly basis, or watch the daily color guard report in the US market on a daily basis. They now have the enhanced daily color guard report, so you're getting quite a lot of education along with market timing and guidance on a daily basis through that color guard. And then of course every Friday in Canada and the other countries, we have a very detailed timing report that goes along with the strategy of the week video. So stay informed. We've had to keep on top of the news with the China-US trade talks. That can really move the market. So very, very valuable to stay tuned. The seventh secret is to be an optimist. Be like this little guy in the middle here. Your attitude determines your direction. And you can see the optimist is all sunny here. The pessimist is not quite as sunny. And then Dr. Lito always says, be an optimist, but don't be a foolish optimist. Follow the 7 secrets for success. So know what you're doing, learn, continue to learn. We all make mistakes. We have to learn from our mistakes, right? Okay, but be optimistic. There's no better way to secure your future than investing and trading in the markets. That's been proven over many, many years. And then I did add an 8th secret. I said there's an 8th secret right now, and that is attend the all-new Toronto 2-day investment seminar, where we dive deep into Dr. Lito's 7 secrets for making money with VectorVest. If you're living in the Toronto area, I know we've got a couple of folks coming from far away, but if you do live in the Toronto area, you can attend live at the Novotel Toronto Mississauga Hotel. There is an early bird going on until May 17th. You can bring a guest for free. If you're elite and you bring or you're bringing a guest, you do need to call the 1-800 number shown here. But I would love to meet you and see you in Toronto at that event. Myself, Steve Chappell, and Ray Clark, our Vice President, Educational Services, and Jim will be your instructors for that one. The live stream, somebody asked the question in the chat box, I'm not going to be available for the 2 days. Can I watch the recordings later? Whether you attend live or attend through the live stream from the convenience of your own home, you will get the workbooks and the recordings for an entire year. So yes, it's a great way to make sure you've got an opportunity to teach your children and grandchildren and family members from the VectorVest 2-day. And there's some new people here, and if you're new and you want to try out the VectorVest program, you can try it out for 30 days, $9.95 US. Just call 1-888-658-7638. So that was a real quick recap of the 7 secrets. Are there any questions? Ed just says, thank you, Barbara and Stan. I've been trying to understand Fib. This was a great explanation. Charles is asking, if I don't own a stock, for example, the SPX, can you trade similar to in synthetic? That's one of the things that Jim Penna will be teaching in Toronto, how you can, how the number of contracts to trade on the SPX to protect your portfolio is a great technique. You wouldn't be able to do the collar, but you could do the long put for sure. The 5 numbers, was that on the Fib, Lawrence? It will be in the slides that you're going to receive tomorrow, or you can go to the YouTube channel and get it right away. But I'll just see if I can find the slide, and there it is. If you want, if your screen is minimized, you should see a camera in the top right, and you can click on the camera and get a screenshot of Dr. Starr's setup. Yep, Dana, you will get a copy of the recording. I hope to get it out. It'll be out tomorrow for sure. I hope in the morning, but it might be sort of mid-afternoon, and it goes out, you know, in groups. I can't send it out to everybody. Rasami, the YouTube channel. I'm going to go back here. I'm going to make you dizzy going back in these slides, but it's a great feature here to show you. So here's the YouTube channel, youtube.com/user/VectorVestMB. You can also just search for VectorVest YouTube. And they've been live streaming our forum presentation today. And then it stays on the channel as a recording. So even this afternoon, you can go back and view the recording of everything we covered today. Great, thank you for that comment, Les. He said never really liked Fibonacci in the past, but maybe we'll get back into it, and that's fantastic. All right, Nick, did that answer your question on the YouTube? Hope it did. Richard Z is asking about, are all the recordings available from the past? No, just the last 3 forums. It was 3 forums ago that Clay Royer, who does our YouTube maintenance and planning, thought this would be a perfect forum to share with the YouTube world. I don't know how long they'll be there, Richard, but it's there. And Michael from Ottawa says, by the way, Glenn Tompkins' Twitch, he's on Twitch Wednesday to Friday at 2. He's offering a $1 trial for 30 days on twitch.com. So that might be interesting for folks to have a look at. And Erwin, thank you so much. Erwin is sort of really a right-hand person for our user group in Regina. He says, great information on how to use the Fib by Dr. Starr, and loves the 7 secrets, as they are a great reminder of the basics behind the long-term success of VectorVest. Looking forward to attending the 2-day May 31st and June 1st. Provide some of the best VectorVest investing education at a very reasonable price. Thank you, he says. That's awesome, Erwin. Thank you for that. Yeah, The swing trading that Dr. Starr described, I think typically will be your smaller account. And the longer term, the type of guidance you're going to receive in a lot of the presentations, the worry-free investing that Jim Penna does, and my own, where I talked about Grace Groner and you know, the high dividend safety, high dividend growth, high relative safety stocks. That's going to be a big part of what you're going to learn as well. And the options, if you have them, even with a wide stop of the 30%, which is pretty great. I mean, it is hard to suffer through a 30% loss, but when you have proven results like this with 80% winners and low commissions, holding stocks for 7 years, you know, as long as you buy good quality, we know the markets go up and down, but over the long term, the dividend growers account for about 40% of the growth in your portfolio. Very, very important. All right, and I think William has chatted in these links for you to have a look at. And I really do want to thank everybody again for coming out and your comments and questions. If we didn't get to your question or comment, Dr. Starr, I believe, did give you some information there that, you know, well, you can send me an email as well. And then always you can call people like William and other support representatives, and that's that 800 number, 1-888-658-7638. They're there today. And thanks again to everyone for joining us. And that's my email as well. All right, and Asif, yes, this has been recorded. Wendy, thank you for your kind comment there. Excellent, awesome present session, she says. All right. Thank you, Barry. Always appreciate hearing from you and a few people from the Halifax area today on the webinar, so that's pretty cool. All right. Thank you, Michael. It says stupendous. I don't know about that, Louis, but Louis says he does recognize the person in the swing, the wife of a celebrity. That's pretty cool. All right. Thanks, everyone. Have a great rest of your weekend, and make sure you celebrate Mother's Day, and have a wonderful Sunday with family and friends. And really great to have you all with us. Thank you, Terry from South Carolina. That's pretty awesome. And Emmanuel, thank you for your comments as well. All right, I'm going to close it off with that. And thanks again to our very special guest speaker, Dr. Barbara Starr, giving us her time, not only today, but in preparing the presentation, very specially for our group. Just tremendously appreciated. And thanks again to William. And thanks again to all of you, and have a great rest of your weekend, everyone.